Good evening, folks. Welcome back. Tonight, we're talking about two companies having very different Mondays. Again, if you're not familiar with me, my name is Max Pitts with Trades and Gains, and we are talking about some earnings reports tonight on the channel. One is making billions from government contracts and artificial intelligence. The other is making, well, let's just say slightly less and selling off brand Ozempic like it's bootleg DVD in Times Square. Now, let's kick things off with Palantir. Yes, the spy tech company that helps governments and corporations make sense of mountains of data, and based on their earnings also makes sense of mountains of cash. This quarter, Palantir did something it's never done before. They cracked $1 billion in revenue in a single quarter. Now, earnings per share came in at 16 cents versus the expected 14. That's not just a beat. That's the Wall Street equivalent of showing up to a dinner party with truffle risotto when everyone else brought hummus. The U.S. commercial revenue up 93% year over year. U.S. government revenue is up 53%, and their total contract value last quarter was $2.27 billion. Yeah, billion with a B as in Becky. And most of this is thanks to Palantir's AI integration, which, if you believe CEO Alex Karp, is like they've single-handedly harnessed the power of Skynet. But, for good. We tether AI to real-world objects and relationships. And that is a direct quote from Alex Karp. The translation here: we build tools that can track a sandwich from a deli in Queens to a submarine in the Pacific. But not everyone is impressed. Some Wall Street analysts say Palantir's valuation is, let's say, unsustainable. They're trading at 24 times the historical market multiple of the S&P 500, which means for those of you who skipped finance class, buying Palantir right now is like paying $400 for an Uber ride because you really, really need to get to brunch. Still, the stock is up 110% this year, and they just landed a $10 billion Army contract. So if Palantir is overvalued, the Pentagon is clearly okay with paying premium prices. Now, from the company that's printing money to the one that just had its stock ripped apart like a Costco sample table on a Saturday filled with soccer moms. Now, hims and hers. The telehealth company that sells everything from hair loss treatments to knockoff weight loss drugs just reported earnings as well. Revenue was up 73% year over year to $544.8 million, which sounds great until you realize Wall Street wanted $552 million. Whew. Cue the sad music. Yes, they missed expectations by $7 million, and investors acted like the CEO just said he was pivoting the company to cryptocurrency mining. The stock dropped nearly 10% after hours. Now, part of that problem is their, let's call it, creative approach to selling compounded GLP-1 weight loss drugs. For the uninitiated, compound drugs are like the generic brand cereal of medicine. Technically the same thing, but instead of Frosted Flakes, it's called Sugary Tiger Crunch. The FDA says those versions are only legal when the brand name drug is in shortage. But hims and hers, they kept selling long after the shortage had ended, claiming they were just offering quote-unquote personalized doses, which is a little like saying your moonshine operation is really just an artisanal vodka making. Insane. And if that wasn't enough, they already had a PR nightmare earlier this year when their short-lived partnership with Novo Nordisk, the maker of Ozempic, by the way, imploded. Novo Nordisk accused them of mass sales of compounded drugs under the quote-unquote false guise of personalization, which is basically pharma speak for stop stealing my lunch money now. Now, Hims did beat earnings expectations on profit, 17 cents per share versus 15 expected, but guess what? Investors did not care. because Wall Street loves growth, but they hate lawsuits even more. So here's the split screen here. Palantir is swimming in government contracts, riding the AI wave, and casually telling analysts, yeah, we're growing faster than basically any company of our size ever. Hims is selling discounted weight loss shots, fighting with drug giants, and missing revenue by less than the cost of a used Honda Civic, and still getting punished like they stole Christmas. Are they the Grinch? The moral here, in this market, it's not just about growth, it's about how you grow. If you're Palantir, you make billion-dollar deals with the US Army. If you're Hims, you're basically hoping your GLP-1 doesn't get seized like the counterfeit handbags at JFK. At the end of the day, Palantir is living its best life, the prom king of 2025's tech rally. Hims, on the other hand, is the kid in the detention corner for quote-unquote creative interpretation of the rules. And Wall Street, well, Wall Street's just sitting there deciding which kid gets the trophy and which one gets sent to summer school. Well, that's all I got for you today, folks. Smash that like button, subscribe, and drop your thoughts below. Is Palantir a genius AI play, or just the most expensive government contractor in history? And is Hims just misunderstood, or headed for a giant FDA-sized smackdown? I'll see you guys next time or tomorrow for our daily recaps that we do. Or who knows, maybe I feel like maybe releasing some more ER previews for y'all. Anyways, see you next time, and remember, in the stock market, one man's billion-dollar quarter is another man's regulatory nightmare. Have a great night, and I'll see you guys in the next one.